Hello everyone, I hope you all are doing really well. Today is the first session of management accounting new batch and completely new session, 3rd of October today. We are getting started with management accounting and we target this to complete it, and in fact to target those students who are actually completing or willing to give their examination in December or March. If you're planning to give your examination in December or March, then this is the classes which will be highly beneficial for you. What we'll be doing is nothing but we'll be going through the content of the syllabus. We'll be going through the real-time examples of these syllabus, and also we'll be doing the MCQs. We'll be doing the 20-mark questions, just to give you an overview that this paper, performance management, has 60% of MCQs and it has 40% of two 20-mark each problems. So two big problems are there, and 60% of the syllabus is going to be MCQs. Now, when I say it is going to be MCQs, the first 30 marks, okay, the first 30 marks is going to be 6 questions, okay, 6 questions, which contains 5 questions each. And that's going to be a comprehensive, a case, a scenario, out of which from each case you will be getting 5 questions. And then the next, no, sorry, not 5, let me just clarify. Each question will be for 2 marks. Each question will be for 2 marks in the MCQ session. So you will be getting, for 30 marks, you'll be getting 15 questions, 3 cases, and 5 questions each from it. Sorry for that information. And then you will be getting 15 independent MCQs for the next half, which is section A, 3 case scenarios, each question consisting of 5 questions, and having MCQs. Each question will have for 2 marks. And then section B will be 15 questions for 2 marks each. And then section C will be 2 questions of 20 marks each. That will be the end of the question paper. This is how it is. Now, the point here is, what I have seen is maximum students face difficulties in performance management because they do not have a strong base in management accounting. In fact, if we just go through the first content of this book, it starts with revision of management accounting topics. And if you have given your examination of management accounting recently, then this paper can be is the first paper which you need to go through and finish it at the earliest. Understand this. We'll be going through the content and also require you to revise it on a regular basis so that you are on par. And if suppose you are giving one more paper of your examination, you should be confident enough to complete it at the earliest and do the homeworks, whatever is said. We all know that you have work, you will be having some of the other works to be done, but take out some time and make sure that you complete it by December or March according to your. And even if you are watching this recording sometime later, plan your exam accordingly. Reach out to us anytime. Now, in this session, whoever is there in this live session, you guys can ask me doubts anytime in between the session. I'll give time also. If you have any questions, I'll stop, I'll ask questions. I would like you guys to participate in it. Tell me what you are looking out for. Tell me what you've understood. Tell me what you've not understood. If there's anything as such, communicate with me. That's the whole purpose of live classes. For me taking this live class right now, the purpose is your participation, and that's what is required. So will that be fine? I would like you guys to tell me a yes in the chat section that if you are ready to participate in the session. Put down yes in the chat section. All right, I can see some. Yes. Now, moving forward, this is the chapter learning objectives. We are going to go through, the basics of management accounting, means something, revision of management accounting syllabus. So let's get started with it. Now, understand this. traditional costing method. You see what was there, the absorption costing and the marginal costing. Now what happens in these traditional costing methods, we are going to look forward in this chapter a revision about it, and also a revision about the standard costing, flexible budgeting and stuff which you have already dealt with. Still we are going to do it with you so that you guys have proper clarity over it. All right, let me just zoom in so that you guys can have a proper look of it. Now, what's the main purpose of costing? Why do we as cost accountants do this? Costing is nothing but to get to know the cost of the product. To get to know what? To get to know the cost of the product. That's why we do this costing. In fact, what happens here is, suppose you are a person who is manufacturing something, and when you're manufacturing something, you have your material cost, you have your labor cost, you have your overheads cost, you have your direct expenditure, you have different indirect expenditures, which is all directly or indirectly attributable to the product. Now when that is directly or indirectly attributable to the product, that how you need to segregate those costs and come up towards the cost of the product. That's what is the main thing which you need to do in costing. Come up with the cost of the product, come up with the right cost of the product. Now when you get the right cost of the product, what will you add with to the cost is nothing but you will add your margin, you will add your profit margin, you will add how much ever profit you want from this cost. Now in this cost everything is covered. What all things will be covered? Your material, your labor, your overheads, every stuff like these will already be covered in this. Now when these stuff is already covered, so jitna bhi kharcha lag raha, whatever is the expenses, whatever is the cost levied, everything is covered in this itself. And then what happens is nothing but you add your margin and then you set your price. So on every product sold, every unit sold, you have a margin, you have a price, you get something out of it. Now understand this, setting up of this margin is also a question. That's nothing but price setting policies. But for that you need to know your cost. Now with this cost, what you're doing is nothing but you are trying to, okay, you are trying to minimize your cost and maximize your price. Yes or no? Always you'll try to what? You'll try to minimize your cost and maximize your price. Now minimizing your cost, maximizing your price, what will be the goal? Is to have huge profits. That's for all businesses, right? Yes or no? Put it down in the chat section. Reduce the cost, increase the price. That's what is for maximum businesses. Now when that is there for the maximum businesses, what happens? Your margin goes up automatically. Now this is the basic funda for every business to do. Now how can we reduce the cost? How can we reduce the cost? We can only reduce the cost by knowing what all costs are there, what costs are avoidable, what costs are unavoidable, what is the method of this costing. If we use that method of costing, what would be the cost? What is it changing? Shall we take the fixed cost also? Shall we take the we should not take the fixed cost, something like that. These all are the stuff which will go through your mind while setting up the cost and then setting up the margin, price. You may have target profits also. So there's so much of a stuff which is there in this particular subject, performance management. Very interesting, believe me. This is something which every business needs. Now what do they need is nothing but putting down the cost, putting up the price, having a good margin. That's what they want. And if suppose you are going to go in an interview and tell that I am a cost accountant, I am a management accountant, and I can do this stuff for you. If you just say them this, okay, with huge confidence that I'm a cost accountant, I'm a management accountant, and I have good experience in managing the cost and managing the price of the product through which the company can get more profitability, you're hired, because that's the one of the biggest pain points which businesses will have. Okay, now understand this. What's the purpose of costing? So that we can value the inventory, we can put it down and record it in our cost statements, we can set the price of the product, we can set the uh, profit margin of the product, and based on that we can take decisions for businesses which can grow and move forward. See, what's your role going to be in the organization is that how can I improve this organization? How can I improve the profitability? How can I improve the performance? How can I analyze what's the problem in the business and how can I improve that business? That's what you will be looking out for as a management accountant, as a cost accountant. That's what you'll be looking out for. Gone are the days where you will be just, writing it down what has happened and just report it that okay, this has happened. Gone are the days people who are value like financial accountants, those work is getting taken over by artificial intelligence. What work is not taken up by financial or those what do you call your artificial intelligence, machine learning and stuff, are those work which requires decision making. That's your work to be done. And how you can take decisions is nothing but based on the price, based on the cost and the inventory value. All there are many such things on which you need to understand and take decisions for your business, and that business will grow accordingly. Now, a standard cost for a product or service is a predetermined unit cost set under specified working conditions. You are setting up a set standard cost. Now, understand this. Standard cost, you are setting it is nothing but you are estimating it. You are estimating it, you're calculating it, and you're putting it forward. That's it. It's not like, it's already happened or previous cost you don't take. What has already, okay, what is possible that this can be the cost, that's your standard cost based on some calculations you do. Based on what calculation, you can see main purpose of standard cost: control, planning, performance measurement, inventory valuation, accounting simplification. What you find out is nothing but your standard cost will be helpful for this. If you have a standard cost, okay, suppose I'm making a Coca-Cola bottle. For Coca-Cola bottle, the price of the cost of making a Coca-Cola bottle is suppose $0.4. Okay, $0.4 for example, $0.1 is the cost of it. Now when I know the cost, that this is the cost of this product, I can control the organization. I can plan ahead and see that okay, if this is the cost, I can plan ahead and say that okay, I can produce these many, and then you can measure their performance and say that how many units are created in an hour, how much demand can be met, kind of a stuff. You can at least think about it. You can evaluate your inventory with the use of methods like FIFO, LIFO, which is nothing but last in first out, first in first out. Those methods you can use and get ahead with it. There is only one cost, the standard cost, which is nothing but accounting simplification. What happens is you can account for these stuff properly and easily if you have proper clarity. Okay, here clarity is the key. Okay, now standard costing is most suited to organizations with mass production of homogeneous products, repetitive assembly work. For them it will be like, suppose one product was launched a few days back. Do you know this product? What is this product? Do you know? Can you guys tell me? Which product is this? Come on, at least in the chat section, or you can unmute and talk. Few days back, today is 3rd of October. Few days back, this came. What is this? Which product is this? I've just written down on the screen. Yes, it is the iPhone 13. Now, when this iPhone 13 has come in, has mass production happened for it? The answer is yes. Is it a repetitive assembly work? Yes or no? Yes, it is repetitive assembly work they've done for it. They have done mass production for it. Are you guys there with me? If yes, put it down in the chat section. Now, a large scale of repetition production allows average usage of resources to be determined, and understand that what is the cost of the product and how you are understanding it. Now, standard costing is less suited to organizations that produce non-homogeneous products. where the level of human intervention is high. Okay, now understand this. We've come towards McDonaldization. Now understand what's this McDonaldization. If you would have watched that movie, which is Founder, and it's available on Amazon and Netflix. Founder is a movie which talks about how McDonald's came into the market and how they standardized things. Now understand this. What used to happen? Let me just explain that to you. Have you guys watched that movie Founder? Yes or no? Put it down in the chat section. Yes or no? No. No. Okay. Now let me just explain that to you without any spoilers. Is that McDonald's did not become McDonald's overnight. It took them years and years of trial and error, years and years of experiment, that what will work, how it will work, what will work, how it will work. And then they came towards one McDonaldization, which is nothing but standardization of the cost. Before that, in the time where McDonald's came into, real force in 50s, 40s, 50s, 60s, when they actually wanted to come in to this industry, they were already doing lots and lots of many business. McDonald brothers were doing a lot of business, means there were different stuff, but not getting super profits, not getting huge profits. So what did they do is nothing but they, one fine day, they sat back and saw their accounts. Okay, they sat back and saw their accounts and saw that 78% of the sales, okay, 78% of the sales were coming from a hamburger, a burger, fries, and a Coca-Cola. Okay, a drink. Burgers, fries, Coca-Cola. That's it. These are the three things which were giving them business. So what did they do is nothing but before that they had a huge long menu. What did they do is nothing but they just scrapped out that menu and had only this things in their menu. Okay, now when they had this menu, they made up that, okay, this is only the stuff which we need to make. Now when they got to know that, okay, these are only the stuff which we need to make, what did they have? The next problem is that the time taken to make this. So what did they do is nothing but they came up towards the efficiency. Okay, they wanted efficiency in these products to be made with the highest quality. What did they want? Efficiency, which is nothing but on time, faster, and with the same quality. What did they do is nothing but they went back to the drawing board and they drew the kitchen again. They did lots of trials and errors, and with that all trials and errors, they made their kitchen the speedy system. Okay, the speedy system means you get your order within seconds. There are only 3 products. Maximum of them will order all 3 products. Maybe when they are ordering all 3 products, if we have a system, if we have a production system which can make these 3 things at a faster pace within seconds or ready as the line goes, that will be something revolutionary for us. And that's what they actually did. They made it, and once they made it, they had a standard set, like, each hamburger will have 2 pickles, this much pinch of onion, this much pinch of sauce, and then our hamburger is done, and it will be fast available to people, hot and available to people at a faster pace. And they cut down all their overhead costs. They did not have any hotel space, means dining space to sit and eat, all that stuff. They just removed it that time. Now with this standardization, what did they do is nothing but today, in today's day, they have 40,000 branches across the globe. How many branches? 40,000 branches across the globe McDonald's has. Now that same model was reused and again done, with KFC, Pizza Hut, Domino's, all that stuff was done. But what I want you guys to understand is nothing but what did they do is nothing but they came towards a performance analysis. They identified the problem, and then they came up with one formula that how you can go ahead, and that's how today that franchise goes on well, doing well everywhere. Why is doing well almost everywhere? Is because standardization. You have a simple process to follow. If you follow that process, you do it. If you don't follow that process, you face difficulties. If you try doing some tweaks and turns in there, then you'll find problems. But if you go, like suppose McDonald's, they added on with that Mac Cafe, or that coffee cafe or something like that, but that's not going on well. What's going on well is the hamburger, fries, Coca-Cola or Sprite or something like that, which is they sell it. Do you guys agree with me? If you guys agree with me, type down yes in the chat section. If you guys don't agree with me, then type down no and give me an explanation also about it. Agree? Okay, yes, guys say yes, yes, yes. Fine. Let's move forward towards a test understanding. Which of the following organizations may use standard costing? A bank, a kitchen designer, a food manufacturer. Who can use standard costing? Understand this standard costing. Let me just go back up and explain that again to you. Where can standard costing be used is nothing but you can see in here is more suited to organizations with mass production of homogeneous products, a repetitive assembly work. Homogeneous products is nothing but the same product and you have a repetitive assembly work. That's what you'll be doing. Now tell me, in a bank, is there repetitive work and mass production? In a kitchen designer will be like everyone will have their own type of designing of kitchen. Yes or no? So I don't think so. Kitchen designer fits in standard costing. A food manufacturer and a bank, can they be? Yes, because they are repetitive works going on again and again. And if you have a standard cost set for it, that will be much more enough. Yes or no? You guys there with me? Yes. Now, moving forward. Yes, moving forward, preparing standard cost. A standard cost is based on the expected price and the usage of material, labor, and overheads. Now, K Limited makes two products. Information regarding of those products is given below. You can see in here, there's another test understanding. Now, this is something which you guys have already done it in your management accounting. If you've done it in your management accounting, then this is a cakewalk. But if suppose if you have not done in your management accounting paper, then I want you guys to do it here with me right now. Now, K Limited makes two products. The information regarding one of those products is given below. Budgeted output sales of the year is nothing but 900 units. Okay, 900 units is nothing but the sales of the year. Standard details of one product is nothing but 40 square meters. Per square meter is how much? 5.3. Now that is for one unit. Bonding department needs 24 hours at $5 per hour. Finishing department needs 15 hours at 4.5 per hour and 1.5 per labor hour, one for finishing labor hour. Now, what do we need to find out? We need to find out what is the prime cost, variable production cost, total production cost, and total cost. And then we need to calculate the selling price per unit, allowing for a profit of 25% of the selling price. Is there anything else we need to find out? No. So now let's just find out what's the prime cost. Prime cost is nothing but direct materials, direct labor, direct expenditure. Now, what's there we need to do is nothing but we need to find out it for this one. Like suppose you see 40 square meters at 5.3 per square meter. So what is for per unit? It will be 40 into 5.3. What is 40 into 5.3? I hope you guys have a calculator. 40 into 5.3, $212 for one direct material of one unit. Then comes bonding department and finishing department. You have two laborers to pay in here. So bonding department, how much you need to pay is nothing but 24 into 5 per hour to get one unit done. So how much it is? 120 here. And then next, finishing department requires 15 hours of labor in 4.8 labor hours for 1 unit, that's 72 hours. And then we have the direct expenditure, which is 1.5 per bonding labor hour. What is the 1.5? How many hours? That is 1.5 into 24. Are you guys there with me? That's 36. And then $1 per finishing labor hour is 15, so it is 15. Now this total is nothing but my prime cost. Okay, this total is nothing but my prime cost, 212 plus 120 plus 72 plus 36 plus 15, which is nothing but 455. Okay, 455 is my prime cost. Now understand this, we found out the prime cost. This is for 1 unit. Now if it is for 900 units, it is 455 into 900. That's it. Now what's to be calculated is nothing but variable production cost. Now what are the variable production cost is nothing but this material, wages, direct expenditure. These all are your variable production cost. So it's almost the same answer. What's the total production cost? Total production cost, we'll add on 36,000 because this is fixed production overhead. So 455 into 900, which is nothing but, if you can just do it in your calculator, 455 into 900 is 409,500 or 4,09,500 plus 36,000. That's your total production cost. And what's your total cost is nothing but 409,500 plus 36,000 plus 27,000. That's it. 4,72,500 or 472,500 will be your total cost. Now, when we have this total cost, what he is asking is to calculate the selling price per unit, allowing a profit of 25% of selling price. Okay. Now, when a profit of 25% on the selling price, then a profit will be for 33%. Now, let me just explain you this. Tell me, guys, do you know this? Are you guys good till now? Total price of the product, cost of the product, 4,72,500 for 900 units. We're just finding out the cost. Okay. Ab yahan pe what we have to do is nothing but allowing a profit of 25% of the selling price. Ab selling price pe 25% का profit है, तो cost price पे कितना profit होगा? How much would be the profit on the cost price? Do you guys know this formula? You guys there with me? Understand this. If suppose 100 is your cost, okay, and 33 is your profit, what is this? 133 is nothing but your selling price. Or let me just take another example for you. If 100 is your cost, 25 is the profit on the cost, then 125 is your selling price. Now, this is nothing but the cost value. This is nothing but your price. This is nothing but your profit. Okay. Now, when this is your profit, the question comes in here is that what is the profit on cost? Now, what is the profit on cost is nothing but 25 divided by 100. 25 divided by 100 is nothing but my profit on cost. And then here is nothing but 25 divided by 125. How much it is? Here is equals to 25%. But here equals to how much? 20%. Why? It's because the profit on sale value is always, kind of a less, and profit on that cost is more, so that you get the right value of it. It's nothing but understand this logic behind it. Now, what we have to do right now here is nothing but add a profit of 25% on the selling price पे, बट हमारे पास तो सेलिंग प्राइस है ही नहीं. क्या है हमारे पास? We have cost price. Now when we have this cost price, how do we calculate this? Is nothing but suppose 25 divided by suppose for example 125. Okay, 125, it is equal 25 divided by 125. Or let me just explain that to you in another way. If the price profit on sales value is 25%, then automatically profit on cost price is 33.33 percentage. And to get that, if you just multiply this, 4,72,500 multiplied by 33.33 percentage is nothing but 1,57,484.25. And if I just divide it by 900 units, it is 174.98. Now, suppose my what's my cost price? 472,500 divided by 900 units is nothing but 525. 525. Suppose this is my profit. What becomes my sales price is nothing but 525 plus 174.98, which is nothing but 699.98, or I can just say 700. Now on this 700, okay, 700 into 25% is equals to how much? 175 or 174.98 or 175 almost. Are you guys getting this reverse logic? This is already done in management accounting. I just wanted to explain that to you. अगर नहीं समझ में आया, I'll explain it once again after the session, or else we can go through it once again. That's nothing but profit on cost and profit on sales price. Two different stuff. You guys there with me? If yes, put down yes in the chat section. Yes. All right, let's move forward now. Now, types of standards, what are the standards which you need to set for your business to grow is nothing but, first of all, you need to set the attainable standards. These are nothing but your standards which you can achieve. Okay, like suppose you are starting in a year, you say that I'm going to produce 100 units. Suppose you are setting a target that I need to achieve $1 million in a year. How much you need to achieve? $1 million in a year. I want to achieve. Now, when you want to achieve $1 million in a year, is that realistic? Do you have a plan for it? Yes or no? That's what is something which you need to look out for. Now, suppose if you have a plan for it and you can do it, then it is attainable. You can get your employees working for it, that yes, you can achieve it, you can do it, and make them work for it. Then comes basic standards. These are long-term standards which remain unchanged over a period of years. Their sole use is to show trends over time for such items such as materials, or whatever is basic required, put it down in those standards. And then comes your current standards. It's nothing but within your current working conditions, are you able to achieve what you want to achieve? Or with your current working scenarios, what can you achieve from these current working scenarios is the question. And if you have an answer for it, those are your current standards. Ideal standards are something which is like kind of impossible to achieve kind of a stuff. मतलब कि बहुत मुश्किल होगी ये अचीव करने के लिए, but still you will try to do it, but you are not going to do it. It is not at all there. It says perfect operating conditions. Understand this, perfection is a myth, does not exist anywhere. Okay, ideal standards cannot be achieved at all. It's just like you're working 24 hours a day. Can you actually work 24 hours a day? No, you cannot. You have to sleep. You have sleep in between. You have so many other works in between. 24 hours a day, not possible for a single person to work. That is kind of ideal standards, which is not going to be achieved in business. Okay. Now, moving forward, preparing standard cost which allow for idle time and waste. Now, what I want you guys to do right now, what we'll do is nothing but we'll come towards a pause of a session today. But what I want you guys to do is nothing but go back and see what we have completed. Today being the first day, what I want you guys to do is nothing but have this clarity of profit on cost price, profit on sales price, getting the cost of the product done, because this is something which you would have already had it if you've done your management accounting. If suppose you got an exemption from it, then you guys need to go through this costing methods and technology, I mean tips, tricks of how do you get to it, because once we are done with chapter 1, right, chapter 2 directly hits towards the main topics of performance management. If I have to show you the syllabus content, if it is there available, yeah, you can see here a revision of management accounting. Once we are done with this, it jumps directly towards advanced costing methods, then CVP analysis, then planning, pricing, relevant costing, risk uncertainty, budgeting, quantitative analytics, advanced variances, almost up to end performance, divisional performance. So here, what I want you guys to do is nothing but have a grip over this particular topic. This is going to be used every time. Whenever we start, we cannot just go to the basics again and again and come towards it. We would be doing at a faster pace, and also we will be going through the real-time examples of these costing methods, which areas it is used, which businesses it is used, and what are the skill sets which you need to improve in so that you will be valued tomorrow in the organization more. It's not just you learn from this book, you put it in the examination, and you pass that examination. That's not just our goal. My goal is to get you knowing with these concepts and make you understand these concepts so that tomorrow in life you can go ahead and apply these concepts and make a living out of it. Is that clear for you? I want a yes or a no in the chat section. Yeah, that's great. Everyone messaging yes, yes, yes. All right, so I'll see you guys in the next session. You'll get the information through the WhatsApp group, and you'll also get this material through the WhatsApp group. Thank you very much for joining in.